We are going to look at today a very important topic. It is controversial, and usually when we meet on a topic like this, it is most of the time inconclusive. Okay, we end up with thoughts, and then we wish ourselves best of luck, and then we go back again. But today, I'm going to try to do a bit of justice to it. Let me make this point clear that it is my angle of thought and also best practices which we have researched on and practiced as well. As I always say, most of the things I talk about here, I am also in it with you. We are all in there. So I'm also an employer, and there are expectations that I have for those, let's say, my employees. We also have our consulting unit, which we also consult for clients. And some of these principles, we use them. We've all made mistakes before. We've all gotten to a stage in in our career or even a point in our life where we we charged for works or we priced for works and it was actually a mess. We've all gone through such situations before, and we still find ourselves in a situation, in fact, in some sort of situation, still like that. Today, we are going to look at available documentation and then also look at what we can deduce from it. Today's webinar is not so much of an imposition. We don't seek to impose principles on you, but we want to think aloud, think wide, and then try to form a bit of a suggestion, which the application of that is up to you. But we want to help to open your understanding to available conditions that should influence how you price as a professional in the AEC industry. Some have actually developed a lot of systems on their own for their pricing. Okay. Some have engaged finance people, engaged other consultants to help them have a pricing formula for their works. Some have done that, and so they are comfortable. But I remember starting up, that was one of the major challenges I faced. We'll look at how it is sold, and then also look at available data, and then we'll try to make the most out of it. Okay, so welcome aboard. Let's settle down, and then let's move straight up into action. So today's theme is understanding costs, margins, and value. We strongly believe that if you understand what cost is, if you understand what margins are, and you also understand value, it will make it easy for you to charge or work out of projects. It's not, let me put these points there, that it's not depending on your level of expertise. You will realize that it is not all projects that you have to be involved in. Some of the projects are not worth your time and effort. Take note of that. It is not all the jobs that you have to get, depending on your level. Okay. Unless you have people that you can take and probably shift it to. I also realized that most of the time, jobs that you don't price well are the jobs that torment you. Those that you take your time, you price very well, they don't tend to torment you because you have enough money to offset some of the stress and the pressure that will be coming with the job. Usually those that you try to make a lot of consideration, you say, please help me with this job because it's for my brother, it's for my sister, it's for my cousin. Those kind of works, it ends up tormenting you because you will not price or charge well. And then you also end up not paying the other person you are delegating the work to also very well. Okay, so that brings a lot of conflict. Today, we will try and, as much as possible, bring some clarity to it. And then the decision will be left for you to take, okay? Whether you will take jobs and do it for free or price less or price higher or whatever option you take, it's up to you. So my job is just to open your understanding on some of these things. So we're going to look at practical pricing for architects. There's been a lot of articles that I have seen during the course of our research. A lot of people try to help their professional units so they will be able to price very well. So we'll be looking at some of them as they are made available. We also know this. Many AEC firms undercharge. Some even bill below their true cost. I have seen a lot of organizations that are priced not to make profit because they are out of jobs and they just want to keep their office open, hoping for a better day. Okay. So if you know you don't have enough jobs in your firm and the jobs that have come are not worth the time, but it will be able to just pay some of the bills because your office is still open, you still have staff. What do? Do you throw away all these jobs which are not even worth your efforts? Sometimes you take them because at least there'll be electricity bills to be paid, there'll be utilities, there'll be other things. And today we are going to actually look at the cost that comes with our work. I'm very sure that if you become so much informed about the costs that are attributed to our works, you'll be able to price accordingly. Usually, the problem is we charge based on our efforts, and that is not the best. Anyway, so as I said, many firms undercharge and some even bill below their true cost. You will learn to price confidently, protect your margins, and grow sustainably. Because if you don't price well, you eat your margins. I will explain what margins are, okay? And you won't also grow. So you see that year on year, you are still the same. Okay, you are still the same. You don't change. You don't make progress, and you don't also move forward. Okay, you are still the same. And sometimes when you look at managers or administrators or let's say CEOs of such firms, you get to a point where you feel, well, is it even worth the waking up in the morning and coming to work? Because you are still not making it. Okay, though everybody sees you as the CEO, you yourself know that it is not actually working. Okay, so this webinar seeks to help you make those gains. Okay, and we will try and give some blueprints which you can repeat. Okay, and apply to your own, to your firm, and I'm sure that is actually going to help you. Okay, so that's it. Today's agenda, we are going to look at the language of business in the AEC. P&L. P&L is profit and loss. And we are going to look at that in plain English, okay? I understood this thing very well when my perspective changed. I'm a student of finance. So I understand the finance bit or the cost bit of some of these things. Initially, I didn't know. But the moment I understood it, I said, no, this one, a lot of people also should understand it. We run our firms because we feel it's a practice. And what we hinge on is actually our technical knowledge, our technical know-how. I'm a civil engineer. I have designed for people. I've done a lot of projects. So I go and even negotiate on cost. And I have no idea about cost. I go to negotiate on our charges and I have no idea about cost. That becomes actually, a main challenge. So today I'll kind of break some business or accounting terms for you so that it will help enlighten you a bit. I'm sure that is going to be the closest point to truth for you. And I pray that by the time we finish with this, at least you'll be informed and enlightened in a way. We are going to look at the cost structures in the AEC business or even any business as a whole. In fact, your architectural business is not different from a factory. It's not different from a cocoa processing factory. You may think there are differences in it. There are no difference. The only difference is that one manufactures products and yours is a service. It's the same structure that you need to have in place. Service-based businesses, product-based businesses, the principles are the same. There's that the form it takes is what varies. So you see that if you apply the knowledge in business to what we are doing, it fits perfectly. And so I think situations like this calls for attention. Okay, so We're also going to talk about margins. I'm going to help you understand what margins are. We know of gross margins, we know of net profit margins. We'll be looking at all these things. There are also things that we'll be looking at. We'll look at the value equation. We're also going to look at how you can confidently price, looking at the pricing blueprint. We will look at some of the examples we have in the country. Here, there are guidelines. And I tried so much to look for the closest one or the one meant for us. And then also look at the closest one that kind of challenges ours. So if I say ours, I'm looking at the Ministry of Works and Housing's price guideline for consultants. And then also, we're also going to look at the Ghana Bar Association's fee scale template, okay? And we'll look at the differences in it and how we can also kind of influence, or probably how that can influence how we also price, okay? The modules are very important. But as I said, whichever options or line you go with, it's about you surviving. It's about you remaining profitable. And there is also one important thing which you must also take note of, especially for consultants and those running big businesses. You will know as you go through this. I have seen it. As I said, I manage Carboya, I manage other units, and so I also understand that you get to a point where you realize profit is not the most important thing in business. It is your cash flow. There are situations where a company is very profitable and still not able to pay their staff, or it's not having cash. I'm not sure you can imagine something like that, but think about it. Sometimes you may see businesses that are very profitable, but they don't have money, or they don't have good cash flow situations in their organizations. You think about that. Maybe getting to the end, I'll try and explain that to you. I know a lot of people at this point are disagreeing with me that if your company is profitable, then you should have money. But it's not all profitability that leads to money. It is supposed to lead to money, but it's not all the time so. I'll try and explain that if I don't forget. So let's just keep that one in the oven. We'll come straight up to that. My name is Abel Kujo. I'm a regular host of Webinar Wednesday. I am the chief servant and the team leader for Carboya. I also head the research department of CAP Solutions. And I have expertise in CAD being consulting and then also AI-driven automations. I pray that next week, maybe I'll show you some of the tools that we have developed that is actually going to change the scale of business. Let's see what God will bring to us by next week. But that's me. And I think my video is also live, so you can see me too. Okay, so let's take it up from this point. Let's start from the beginning. I have seen a lot of pricing samples around during the course of our research, and also at the time when we wanted to know or probably solve that problem, okay, of pricing. We did a lot of research, and so we settled out on some principles, but we saw that the language of business in AEC is the same everywhere. I want to start from this midpoint. In Ghana and West Africa, we have some methods or some principles that actually guide us, but it doesn't truly solve the situation, especially when it comes to the AEC industry. Fee scale exists, but are often discounted in prices. It doesn't matter. Even those that have proper fee scale, like the Ghana Bar Association, sometimes it gets to a point, you meet clients and you have to discount some of the prices. You can't, depending on the economic situation, depending on the relationship, it depends on the type of job, sometimes the length of time you're going to stay on that project. All these things sometimes have influence on your price. So sometimes you see that you can have your opinion as to what you will do, but you end up kind of adjusting or succumbing to the pressures that comes with it. When it comes to government projects, in the AEC industry, we have the Ministry of Works and Housing schedule, which also suggests some rates and also proposes some all-in fee for the consultants on government projects. We'll be looking at that. So we'll be looking at those two situations. Aside all these scenarios we have, what we have noticed is that you have to build your price from your cost. You add your margin, and then probably when it's value-driven, you add that value part to it, and not from necessarily the cheapest quote. What I'm saying now is debatable, But as I said, it is based on your situation. Okay, it's based on your situation. Let me just move out briefly and share with you these documents which we chanced on first. Then I'll come back to my slides. Now, what we have here, which I'm showing, I hope you can see my PDF. This is the Ministry of Works and Housing approved professional fees rates for implementation by built environment professionals. Okay, with this one, like you can see the Architects Registration Council, and there was an interprofessional group that was set up by the Ministry of Works and Housing. It is supposed to be reviewed every 2 years, and the last one has been there and it hasn't been reviewed. I'm not so sure. I stand to be corrected if we have some for 2025. I haven't chanced on that, but this is what we have, and this is how it's done. So they form a committee of eminent members from the various professional bodies, and then they sat down, looked at rates that will help the consultants that the ministry engages. Now, as consultants, what we have noticed is that this serves as a guide, and it serves as a guide when you're working for the government. Most of the time, it is difficult to apply this on private works. As I said, for the private person, they are all the time wishing they could get the best professionals to work for them at the lowest price. That is where your negotiation skills should come in. But when they had that meeting, they were commissioned in 2019, and then the rates took effect from 2021. Let's look at what came out of it. So let me read something. It said, in furtherance to the recommendation from the Interprofessional Body Committee set up in 2019, the Ministry of Works and Housing has approved a new schedule of consultancy fees as indicated below. The new rates takes effect from 11th November 2021, being the date of approval. All professional fees claimed are to be made in accordance with this. So this order is more of when you want to work with the government. But one thing is that the members of the committee took a lot of things into consideration. When you do the reverse engineering, like you do the reverse calculation, you are able to actually appreciate the hourly rates, the daily rates that they built up, and then the monthly rates. You could appreciate that. You could appreciate the things that they took into consideration. And they look fairly good per the back envelope calculations that we have done. But when it is left over a long period of time without reviewing it, you have inflation eating some of the gains or your margins that you have in there. Now, aside this, you also have some rates that takes care of your transportation. So in this rate example that I'm giving you, you said a rate of 2.82 per kilometer is recommended for claims on transportation. So if you're on a government project and you are visiting the site, let's say as a consultant, or you're on the project, you'll be paid some, let's say, allowance for transportation, and they calculate per kilometer. Okay, so if you are very far, then all those things comes at a cost. So then you'll be reimbursed. Then it said other reimbursed expenses should be negotiated and agreed on with the client. A provision of 16.5% of the anticipated cost of the project is recommended as all in fees payable to project consultants. There's also the lump sum pack where all the consultants on the project are given this amount, 16.5%, which will be shared among them. And usually the project lead, that's the architect, sits, and then, some of these things are agreed on and things like that. Okay, so every consultant on the project will have a share of these amounts that are calculated. And here they are saying that the fees you see here doesn't include VAT and NHIL. Okay, so it means that whatever VAT you have will be calculated on that. He said the rate shall be subject to review every 2 years. I haven't seen any new one aside this. If there is, please, you can share that with me afterwards. Now, this is the Ministry of Works and Housing's guide for consultants or professionals whom they engage. And so any fee you charge, they will say relate it or let it tally with this in a way. Okay, so this is a guide. We'll be doing some comparison. Let's look at another one in the system. That is the scale of fees for Ghana Bar Association. I hope this will also be an advice for the leaders of the professional bodies, or members of the professional bodies. If you also have a chance to meet the leaders, you can also kind of give some advice as to how you can also be remunerated when you work. Okay, so the Ghana Bar Association also have their fees, and the difference here is that, okay, so let's go through that first, then we'll go back and then look at the fees, look at the comparison. So you see that for the Ghana Bar Association, they have a scale of fees, and they have grouped their members into categories. You see, in the Ghana Bar Association, there's seniority. I haven't seen that so much playing in the other professional bodies. I know before you become a project director, you must have certain number of years. Some of these things are not so open to the members to even know, so they can know that, okay, per my level of experience, these are the range that I should be pricing. Okay. And what about the freelance? What about those meeting clients, maybe at an event or probably at church or somewhere? Okay. And those clients soliciting for their services, what is going to guide them? It looks like the Ghana Bar Association has done a thorough job. So they curb overcharging. And when you're undercharging, you also know. So they have things that covers for Ghanaian clients and then international clients. So you say that if you're a senior counsels are those who are 10 years plus, and it's not your age, it is the year you are called to the bar. So if you are even 60 years and you are called you are inducted in any of the professional bodies, you are 1 year, that particular year, if that particular year expires, you are 1 year called or probably inducted. Okay, but for the Ghana Bar Association, they pay particular attention to this and their seniority. So people are rewarded for their practice. Okay, so the senior counsel have charges that they have. Then the counsels are those that 5 years to 9 years. Then they have junior counsels that are 5 years and below. Okay, and their price ranges that you have to be. So this actually serves as a proper guide for you. When it comes to professional bodies, let's say engineering, you have a professional engineer, you have all the various gradings, and you don't actually have a scale of fees that will guide you as to how you will charge. Now, when it comes to hourly rates, you can't just charge anyhow. There are guidelines. Okay, so the senior counsel, 10 years and above, these are some of the things that you have to. When it comes to retainer, this is how much you can charge based on the number of years of experience and all those things. Out-of-pocket expenses. So these are incidental costs and out-of-pocket expenses incurred in the provision of the legal service on behalf of the client and should be discussed as part of the engagement. Okay, and they may include filing fees and all those kind of stuff. So now, every role that they ought to play, there are guidelines. And so if even you are called to the bar today, tomorrow, when somebody engages you, you know how to charge. You don't do guesswork. You don't charge based on your mood. You don't charge because you have to pay school fees. You don't charge because you have a funeral and you need a lot of money, and so you have to charge high. You don't charge because you have a lot of money and you think you don't need so much. And so, yeah, those kind of stuff. This charges that the Ghana Bar Association has given to their people doesn't mean that they can't do jobs for free. Okay, no, they can do that. But if you want to charge, these are some of the conditions. In fact, if you are a junior counsel and you charge like a senior counsel, that person can, after taking the money, they can report you and they will deal with you. Okay. And there are several cases and things that we should do. But for us in the AEC, it is not the same. Okay, so this is just an overview to help you with some kind of comparison. Then we will now move back to our slides and then I'll continue. I just wanted you to see what we have in the system, those that are available to us, and then now I can comment on it. So now we can look at the Ghana Bar Association versus the Ministry of Works and Housing fee structure. Which model better supports profitability? Okay. Someone will say, oh, but the services that the lawyers provide are not the same as engineers. We are not supposed to say lawyers are charging this, so we're also charging this. But we are all providing professional services. Our services we provide are known. They are not rocket science. They are not things that we say you don't know what most of the time you are approached to do. We know because most of the tasks we do are repetitive. If somebody engages a civil engineer to do a structural drawings, we know all the time you are engaged as a civil engineer to provide those structural drawings. So that is what you do all the time. So I feel that the professional bodies should also set up and plan something as a guideline for their people. Because a lot of professionals, when they are inducted, or even those experienced ones, they struggle to charge. And they charge most of the time to lose. And I pray that these discussions we are having will actually bring some of this up to the forefront, and we'll be able to look at that. So let's do some comparative analysis. The GBA's one has a tiered structure, okay? And then they know that if you are dealing with local clients, this is the direction you have to go by. If you are dealing with international, these are the guide, okay? So that you don't end up under pricing or undercharging. For us, a lot of the professionals in the built environment, people take advantage of them. A lot of them, even between ourselves, okay, between an architect and a civil engineer, there is that kind of see, because we don't have this kind of known fee structures based on probably your years of experience and all those kind of stuff. We are sometimes people take advantage of that. I have fallen prey to that a couple of times when I was coming up. I remember there was a time I had a project somewhere outside of Accra, somewhere in the eastern region, Ibri area, and I was on with a team, let's say like an architect and all, I mean other consultants. And the client decided, after we've worked and presented our invoices, the client decided that, oh, I'll go with the works and housing. And the client misinterpreted it. Let me share some of the misinterpretation which I faced. And it happened. I mean, a lot. What they did was that they said, oh, okay, so because you are not always here, we are going to engage you on that hourly thing. Okay. I was that time a bit naive. So when you go for the meeting and you go around and all those stuff, they check the time. If it's 2-3 hours, you are leaving Accra to, let's say, Bri. It takes you 1 hour, 30 minutes to get to Bri. You spend 3 hours on the site. You drive 1.5 hours back to your office. Then they say you spend 3 hours on that place. They pick your hourly rate and multiply by 3. It is not right. The thing is that as you left the office and you're driving to that place, those ones should be added. They are actually added, not they are supposed to be. They are added to the cost because as you have set off, it is deemed that you are doing the job because you are moving straight away there. If you were not moving to that location, that 1.5 hours, you could have used it for something else. It's your professional time that is being consumed as you are driving to that place. So it is not only the time that you are spending there. And sometimes too, when people engage you for that hourly rate, what they do is that they will not ask you to come to the site more often. They say, oh, when we need you, maybe twice in a month or maybe once in a month and things like that. And then they will pile up a lot of the things. When they have to call you, they won't call you. They will do what they like. So it's like, when you get to the site, look, pick this, break this, turn this. This is not according to the plan. You will spend all your time spending all those stuff, but they will pay you for that little time. So when you go there, you'll be doing damage control, a lot of those stuff. And it's because they want to save costs and they want to make the most out of it. So people take advantage of a lot of professionals. And then some of these things, I mean, knowledge of some of these things is what will help you, protect yourself in a way. So the retainer for the Ghana Bar Association, there are minimum fees that are given to you as we check all those stuff. But if we check this, some of their fees are value linked. So, for example, if let's say they help you in litigation and you get some claim, aside the fees which they have engaged, you at your initial side, you have probably 10 to 20% of the claim, of the value of the litigation, that like the claims that have been given to the clients. And all these things are worked in and they are trained on it. They are well oriented and they know. They also have some that comes in as flat or lump sum. And those ones are for corporate services and things like that. Okay. And let's look at ours. We are looking at general overview of the Ministry of Works and Housing fee structure, which actually plays or comes to play a lot of the time when you're working on government projects. The rate structure is defined monthly, daily, or hourly. So what you see is that this approach works very well for well-established firms. So if, let's say, you're a freelance practitioner, it is difficult to put yourself in this, though you can price and then have something to say, okay, have a defense, okay, based on some of these documentations. But the way it is structured, it favors organizations, it favors consultancy firms that actually do a lot of work for the government, okay. And sometimes when you charge a private firm and they feel like a private client, and the client feels you are overcharging, then that becomes the templates that sometimes you put across to defend yourself in a way. So without that, doesn't mean you can't you can't charge or price in any way. So I will also advise that our professional bodies can actually come up with some of these scale of fees, and that can help. So we have costs for senior consultants, we have costs for project director, we have costs for junior consultants, and things like that. So then now, if you should have, let's say, an engineer who is about 3 years, who have been called to practice about 3 years, because if you look at the structure of the Ministry of Works and Housing's table or fee table, and the way your professional body also ranks you, it is difficult to find where to position yourself. It is not easy for a lot of people. Okay, so now you say, okay, so where do I put myself? Do I put myself as a consultant or a junior consultant or a project consultant or, let's say, project director? Do you get it? That clarity is not there, which should be the job of the professional bodies, to also find a way to help their members to know how to position themselves. If they are going to use the Ministry of Works and Housing fee structure to guide, there should be clarity on that. Okay. Other than that, you will have the most seniors falling as prey to some of these things. And so that's the general overview. So now, when you check it side by side, summary, you can see that we have high margin potential if you take the Ghana Bar Association, because when the project is so big, when the claims are big, then there is high margin potential. Okay, the Ministry of Works and Housing do the same. When the project is big, then the 16.5% gains momentum, because the 16.5% of the cost of the project, not to one person, but to the consulting team. Okay, and they agree, and then they share amongst themselves. The details of that depends on on some factors. I know for some, for some, there are some agreed percentages how it is shared, but there's that lump sum which you can go for, and when the project is big, the money also becomes big. Now, if you have to look at predictable income, if we have to look at predictable income, then if you check the Ghana Bar Association's own, you see that it is a bit limited, because it's case flow dependent. When you have more cases, then if you have continuous cases, then your income is assured. Okay. If you're looking at the predictable income, Ministry of Works and Housing, if you have, let's say, your project duration is a bit higher, then you know that, it's a bit longer, then you know that you have an assured regular inflow of revenue, okay, or cash that are coming in. Now, when you come into overhead recovery clarity, you can have the differences also there based on their fee structure, and then the Ministry of Works and Housing's one, the guideline that a lot of people use. It is mixed anyway, and then some of them they are capped. So if, let's say, you are meeting a lawyer at the initial conference in where they are asking you of your case and other stuff, you're supposed to pay some amount of money, but that one, it is capped. So they can't go beyond what they have to. And sometimes people ask for discount, okay, because it is just an intro. If you don't pass that stage, they won't engage you for you to do the rest. Okay, so sometimes at those ones, some will charge, and then there's also a cap there, but usually they provide discounts on those ones. For us, in our case, it still needs a lot of control. Now, if you look at the two billing structures we have, if you check its fitness for small firms, for the GBA, the Ghana Bar Association's own, it is strong for niche experts. If you are a small firm and let's say your area of specialization is maybe divorce or criminal cases and all those stuff, if you are in that niche space, it is fit for you. Ours, it is our model is better for staffed or multi-person team. If it is one-man practice, or let's say you have a lean practice and all those kind of stuff, it's difficult to apply those ones from the Ministry of Works and Housing. If you are talk of inflation protection, there's flexibility because they can negotiate. But for Ministry of Works and Housing, it's every 2 years, and sometimes it lags for a long time. Now, these are the comparison. And what we are going to look at today as to how you can charge effectively. I'm not looking at these two, okay? I'm looking at this whole pricing or charging thing from a business point of view. So I will have to explain some few things to you. As I said earlier, all businesses have the same principle and the same line. Okay, all businesses, whether you are producing products or you are providing services, it is the same. So I'm going to go through a bit and show you what I think or my suggestion, okay, what I think is best fit, which you can use, whether you have access to the table or your name is captured in the table or not. You can work around. If you're a member of Ghana Bar Association, you don't have that kind of flexibility because for you, your faith is well defined. If you go beyond it excessively, you can be held accountable. But at the other side, it is free for all. So the temptation of you charging below because you just want something to do is high, and you have to understand what goes in there, and that is what we are going to look at today. There are costs involved. Now, if you want to determine your profit and loss statement of every business, for the accounting side, they use an accounting standard they call IAS 1, and that talks about your profit and loss statements, okay? And it has a structure. Now, the structure is this. It has some key components. Let me try to take you through it and make it simple for you. If you are providing any service, if you are producing any goods, if you are starting a new business, if you sell your products, the money you get is called revenue. It's called revenue. Now, if let's say you're an architectural firm and someone asks you that, oh, I want to design an auditorium or probably maybe a school, maybe e-block, how much will you charge? This is where the problem comes in. The one that is charging, that is the professional that is charging, may not actually know exactly the cost that goes into the charge. Sometimes we call friends and ask them, oh, okay, so Charlie, I've gotten some school project. It's about 4-story. How much should I charge? Then you say, oh, charge this. Then, oh, charge that. Oh, charge this. Now, sometimes sometimes some young professionals don't even consult. They charge, and then when they charge, they later find out that they have to engage senior practitioners to help them. But the money they charge is too low that the engagement fee alone with a senior professional will even eat up all the money that they have charged. Do you get it? So that inexperience in the charging is what we want to curb with this webinar. So I'm trying to explain some of the key terms that goes into costs. So there is several forms of that. But if let's say you charge, and let's say you charge for 50,000 for the project, your revenue is 50,000. Now, there is so at every stage you can measure profit. There's what we call gross profit. But before you get gross profit, there's something we call cost of sales or cost of goods sold. So, for example, or let's say in general, to make it easy, I can say direct cost. Before I come in here, let me go back and explain some key terms for you first. I think that will help. Let me go back and explain some key terminologies for you. Okay. Mm-hmm. Okay. Let me explain some key terminologies for you. So we want to come up with with a formula using the P&L or the profit and loss arrangement of running an organization. So if you say revenue, that is the professional fees you charge. If you are a factory producing, let's say, pure water, the sales you make, we call that revenue. Okay, we call that revenue. So the professional fees as a professional is called revenue. And if your fees are too low, your whole profit and loss stays weak. The more jobs you get, the more revenue that comes into the organization. Usually you can be doing poorly, but if your revenue is high, most of the things are taken care of. Okay, most of the things are taken care of. You only find how poor you are running your company when revenue starts slowing down. Then you are faced with your costs. if you look at the theme of today's webinar, is understanding cost, margins, and then value. So the first cost we'll look at is called direct cost. So the direct costs are the billable staff time. So for example, I'm an architectural firm. I have secured a job. It's worth 50,000 Ghana cedis. I have 3 draftsmen that are working for me. I pay each one, let's say 3,000 or 5,000 a month. The draftsman's work is directly attributed to the work that I'm doing. But in my office, I may also have an administrative staff. I have an administrative assistant. I have a receptionist at the front desk. I have, let's say, a driver. I have a security man. You get it? So all those ones are not directly connected to the job that I have gone for. So, but the draftsman is directly connected to it. Okay. So the draftsman is producing the drawing. So the amount of money I'm paying him is attributed or considered as a direct cost to the job that we are delivering. If you have a factory and you're producing, let's say, pure water, the wages of the people that are in the factory that you are paying are direct costs, are considered as direct costs. But the cost of the accountant, the cost of the HR manager is not part of the direct cost. It's also a cost to the organization, but that is not considered as a direct cost. That's considered as an indirect cost. In business, we call that operating costs. Okay. So if we come to the professional firms, we have the billable staff time. That's the staff that are directly connected to it. If I have a project, let's say at Ibri, and I travel to that place, the cost of going to that site is connected to the project. It's a direct cost. Okay, so we bought some A4 or let's say A3 sheets to print the drawings. We have a comb binding machine. We bought it. We've bought one. We've done that. All these things ought to be considered. The direct things that are related to the work you are delivering, we call that direct cost. So you have to understand that. It depends. It varies from organization to organization. If even you don't have a setup, you must have an idea that I have direct costs to my work. So if I give you a job and it's 50,000, you just don't take the 50,000 and go and buy a motorbike, or let's say if you can use it to buy a car, you don't go and buy a car straight away. You'll be faced with a cost. You get it? You'll be faced with a direct cost. And that is one thing that we have to pay particular attention about. So we call that direct cost. So there are the billable staff time, the travel time, the consultants, the consultants' fees, the materials that you're using. All this falls, below what we call that. If you miscount that, you will bill below your true cost, and you end up having, that'll be eaten into your margin. Now, we call that direct cost. Now, we also have what we call gross profit. Now, if you have your revenue and you deduct the direct cost to that, from the revenue, you get what we call gross profit. Okay. And if you have your revenue and you deduct the direct cost, and you want to know how profitable you are at that particular top level, then you have to divide by the revenue, and that gives you your margin. That will let you know that, so what I did, I had about 60% margin. So let me give you an example. There's something we call gross profit margin, and that you get that one when you deduct your direct cost from your revenue and you divide by the revenue. That gives you your gross profit margin. So let's say I take a job of 50,000. The direct cost to the project, the direct cost to the project is 20,000. Okay, it's 20,000. The staff, everybody that I have to pay that is directly connected to it is 20,000. Now, if I deduct the 20,000 from the 50,000, I get 30,000. If I divide by the 50,000 and multiply by 100, I get 60. So my gross profit margin now is 60. Okay, so that is what we call the gross profit margin. Now, we'll be looking at that, but as at this point, I'm just explaining those things to you. So the cost that you don't have to forget is your direct cost. The costs that are directly attributed to the production of your work. If you're a factory and you're producing pure water, and the factory plants and other things consumes part of the electricity cost, and then the office also with the air conditioning and other stuff, they also do that. Part of the electricity cost will be charged on the direct cost. and part will be charged on the indirect cost. You get it? You don't charge all of that on the factory, no, like on the production of the water as a direct cost, no. Now, you also have indirect costs. That's your overhead. So the rent that you have, if you have an office, okay, if you have an office, you pay rent. And the funny thing is that sometimes some professionals have built their own, buildings or offices. And because they have moved from a rented place to their own office, they say, oh, I won't charge anything. Like I won't. What they will say is that, oh, then I will not charge again. Okay, I'll not charge again for rent. You have to charge. You have to charge for rent. Okay, you have to charge for rent. Don't say that because you are operating from your house, you don't have to, like, you won't consider that as an indirect cost. Consider that as an indirect cost and set that money aside. If you are working in your own building, pay the rent to yourself. You can create a fund, put the money there, and you can even invest that fund. So a time will come, because for that building, you have to pay property rate and all those kind of stuff. Okay, so if you don't pay, for the rent because the building is yours, how do you come up to pay all those things? So as I was explaining, we have the indirect cost. The indirect costs, you can consider them as your overheads, the utilities you pay, the administrative stuff. A lot of people in their practice don't pay a lot of administrative costs because it is them and their partners, and then they have the draftsman in some room, and then that's all. Okay, so that is actually what they have there. They don't have an account unit. They don't have HR that manages the people because the firm is too small, and so they don't have a lot of indirect costs. But you pay. It is possible you'll be paying insurance. It's likely you are paying for CPD programs in your institution. It's likely you are paying for softwares. Okay, it's likely you are paying for your software that you are using for your practice. It's likely you are paying for a lot of things that are not directly connected to your production, and you must recover all the CPD programs that GHIE or IET charges you, or GIA charges you, or GHIS charges you, and you go for to add knowledge to yourself. Who will bear the cost? The organization should be able to bear that cost. Those ones are considered as indirect costs. And you don't say that because you got one job and it's 50,000, you have to surcharge everything on that 50,000. No. So there are things that you have to do. At the beginning, you need to have a budget and then know how much it will cost you to run your office, considering all your costs, whether direct or indirect costs, for a year. And then you can divide it by 12 to know how much it costs you to run your office in a month. Now, if you know that amount, you can break it down in 4 weeks. So now, if you know that it costs us 40,000 or 50,000 to break even in our organization, if breaking even means you are not making profit, you are not running at a loss, so it will cost you 50,000. Then, as the partners or as the owners of the firm, you must know that you have to have job worth 50,000 or more to keep your business afloat. So you don't go to sleep. Okay, you don't go to sleep. You have to make sure you have jobs coming in month on month worth more than 50,000. Okay, so those are the things that you consider, and that can have a direct, or let's say partially, it can have an influence on how much you charge. We'll be coming into that place. So now, when you have your gross profit, after considering your revenue and deducting your direct costs, the direct costs, now we know what the direct costs are, we get what we call the gross profit. Now, you have to also deduct the indirect costs also from your gross profit, and that gives you what we call operating profit. Okay, so that's your earning before interest and tax. And so if you have that one, and now you pay for your interest, let's say your interest, maybe you have gone for a car loan, and you pay interest on that month on month. The government expects you to pay those interests before you pay tax. Take note of that. The government, so So operating profit is also called as earnings before interest and tax. So the government expects you to pay interest if, let's say, you have interest and it's been amortized and you are paying every month. There are monies that you pay to offset the loan that you have gone for. The government expects you to even incur costs and pay. Like, they want you to grow. So if you want to buy land and pay the land in pay, like, pay those costs, or probably you went for a loan to buy the land, and every month you pay interest on that. The government expects you to deduct all those months before you pay tax. That is why if you have a very good finance person or an account person, the person will be able to help you make the most out of it. It is not out of place to have an accountant in your firm. A lot of people run away from that. Actually, the small practicing firms, the small consulting firm, you go there and there's no accountant, and they struggle with with their filings and all those kind of stuff. What they do, I know what they do is that they will run their course and then bring in an accountant to just look at the figures and then record, and then annually they file their fees and then all those kind of stuff. So they have issues with SNET, they have issues with GRA, they have all those kind of issues. If you put your house in order, you'll be able to consider all these costs. And as I said, the P&L drives your pricing. It's very, very important. So that after deducting all your interest and tax, then now you have what we call the net profit. This is what you can say, this is what we call the bottom line. So this is what you say that I have made profits after deducting all these things. So you can get a job that will be worth 100,000. And after doing all these deductions, you see that your profit that you have gotten is not so much. But for an AEC firm, if you're able to get something around 15%, 20% in a year on all the jobs that you've done, it's fairly good. 25, that is fantastic. Okay, 25%, that is fantastic. So that is one of the things. And so take note of the costs. Is very, very important. Without that, you'll be pricing wrongly. Okay, so a profit and loss reveals your minimum viable fee. Now, put together your costs. So you can bring in a professional, okay? You can bring in an accountant or a finance person to come help you put your costs or your house in order. You need to get a professional, an accountant, who will help you structure your firm, expose you to a lot of the costs you incur, and then also tell you the minimum viable, the minimum amount of money you should make in a month. Then that will guide you to know that, okay, then for me to run profitably, I have to get this volume of work, this amount of work coming in month on month, because then you would have considered all your costs that goes into that. Okay, and that is one of the important things that you should know. So that I know I have a firm. Month on month, I pay, the money that I part with is about 50,000 Ghana cedis. It means that if I have jobs that brings in 50,000 revenue a month, I have broken even. So it means if I'm able to get a job that is worth about 100,000 and I use 50,000 to offset all these costs, it's good for you. Let me tell you the issue with cost. If you lock your office and you don't open it, you will still bear those costs. If you lock your office for 1 month and you don't operate it, the costs are there. Some are direct, some are indirect. You have staff, you pay the staff. You can't say that you won't pay. If you pay, you pay the statutory payment that comes with them. You pay. Okay? Yeah, you pay. And there are a lot of costs that comes. Your rent, they have even charged you 12 months already, and it's advanced. So you have paid it already. So if you lock the office, you still pay. So you now have to know how to structure yourself very well to do justice to some of these things. So now we know what these ones are. As professionals, we know that revenue means the fees you earn. The costs are the resources that you consume to be able to deliver. The profit is where you deduct all your costs from the revenue. Then the margins are the percentage of the revenue that you keep as profit. Okay, so as we said, the profits, there are several levels of the profits. There are the we have the gross profit margin, which we looked at. We also have the net profit margin. That's the final one. Okay. And then we also have the operating profit margin as well. Okay. So this is how the profit and loss thing looks like. So this is actually our cost structure. We have the direct cost, which is the billable ones. So the project labor, the consultant, your travel time, your print, everything, we consider that as a direct cost. Don't forget that. So when you get a job, so what I advise is that don't be in the habit of quoting price. Immediately someone asks you, okay, I want a 3-story 10, so how much will it cost me? Then you say it will cost you 5,000. No. Come back home. Do some homework. Put some things together. If you don't have, if you don't know your direct costs that is going to be, if you know that the job that you are taking, you don't have the capacity for that, and you are going to engage other senior professionals to help you, call them first. Consider their rate and infuse that in that one, so that when you consider them as consultants and their price is part of it and they deliver the work for you, you will still have something to hold as profit. So understand the cost that goes into the work you are going to do. So you have actually 3 main buckets. The first bucket is your direct cost bucket that goes to directly every cost that comes to the direct delivery of the project. We have the indirect one, we also call overhead. That one, your rent, your utilities, your software, your admin, your CPD things that you're coming, your stamp, your license renewal, your insurance, the marketing that you do, all those ones comes in as the indirect. It's called indirect because you don't see that as directly connected to the project that you're doing. For example, the admin assistant or the receptionist at the front desk, you may think that that receptionist is not doing anything for the company. That receptionist is actually welcoming the clients, making them feel, welcomed, and all those kind of stuff. They add to the organization. They pick the call of the organizations. So all those stuff, they are supporting. So they are the supporting staff. You have to consider them as part of it. If you are a freelance, you don't have a well-established, let's say, firm with all this, and let's say your overhead cost is low, then that will influence your pricing. So you see that an architect may charge, let's say, 20,000, 30,000 for, let's say, a 2-story, 4-bedroom house, and you will get a fresh architect charging about 5,000. It's because the one charging 5,000, that person can afford to charge 5,000 because that person, that professional is the only one in the game. So he designs himself, he draws himself, and he hasn't hired anybody. So usually it's difficult to compete with such people. There was a time I heard that the draftsmen were giving the architects tough time because now instead of like the draftsmen, because their overheads were very, very low or zero at all, their indirect costs were very, very low. They could charge very close to the gutter, and the architects cannot come close to that because a well-established architectural firm, one is charging, is looking at the cost, the indirect cost. He's not charging because he's an architect. He's charging because he has an accountant. He has an HR. He has a front desk person. He has utilities to pay. He has software that he has paid for and all those kind of stuff. So the overhead cost is high. So like they can't dribble around. But the freelance people, the draftsmen and all those people around, for them, they can even charge just for their chop money and then do the work. And that is the difference. So your cost structure actually influences, or it has a role to play in your pricing. Take note of that. You get it? So you can't charge just out of the blue moon. You need to put some pen to paper and know the things that goes into it. Now, we also have the hidden costs. There are a lot of hidden costs that comes to it. But if you don't avert your mind to it, you will not see them. So you are an architect. You have been given the concept. You are putting the concept together. That time, who pays for that? Okay. So the time, so the client will tell you, oh, I don't like this thing, change this side. Let my building look like Coca-Cola. But now my building is looking like, let the building look like Coca-Cola bottle, but now the building is looking like the beer bottle. So change this side a bit, change this top a bit. All those meetings that you are attending and all those stuff, those transportation costs and all those stuff, who bears it? But they are hidden costs. You are doing that with the consolation that, oh, after all, when you get the cost, you offset. When you get the cost, you will not offset it if you don't consider that. You get it? So if I come to your office all the time, the client, I come to your office all the time, and we are reviewing the work, we are coming up with the drawing, like with the concept, and every cost that I incur ought to be penned down because it's supposed to be penned against that project that we are doing. So that is very important. The downtime, the unpaid proposals. Okay, some crowd will tell you, okay, oh, so come up with a concept and let me see. As you are doing the modeling, the 3D, who pays for that? For some people, because they are not well established, they use the 3D model they have done to convince the clients. Do you get it? And because they came to Cab Royale and learned how to do the 3D, and now they can do nice 3D models, and so they don't place value on that. They don't charge their clients for that. They use that to get their job. Do you get it? When you do that, these are costs that you are not actually pricing. It is your real time, your professional time that you are wasting. Okay. And sometimes some people too, when you deliver the job to them, you have to chase them for the money. So, oh, come to my office. You go there, he's not there. But you go there, the check is not ready. All those fee collection time that you are chasing, who bears that cost? So those ones are what we call the hidden cost. So the general cost that you have to understand when you want to price or charge for a project are three key ones. The direct cost, which would let you know whether your production room is effective. That is very, very important. Okay, the direct cost. So if you are getting low, let's say you are getting very low gross profit margin, it tells you that you are not being efficient. Your draftsmen are wasting so much time. They are not being productive. They are not finishing the works on time. They are delaying. Something is happening at your production room, which you have to actually take particular attention to that. So the direct cost, you have spoken a lot about that. You can look at all these things and put a price tag to it. Okay. And as I said, you don't move your entire direct and indirect costs against one job you have gotten. Okay. In that case, you will not see yourself being profitable, but you must have a target, and you know that, like, run it up from bottom, or let's say top down. Okay, run it from top down, where you know the average cost of your operations, your firm, and add some markup to it. Okay, for let's say profits. Okay, then now you know that if I run up to about 100,000 a month, this is what I have. So then now you can play between that, and that will inform. So now, having gotten to know how much you are supposed to, how much it costs you to run your firm, and how much it costs you to be profitable, now when you are charging for the work, you can now look out for the benchmarks that are available. Okay, and then so let's say for this particular month, I have gotten 4 jobs, and these 4 jobs summed together is going to give me 100,000. But there are some jobs, this about maybe 5-bedroom, 4-bedroom. So how many people am I going to allocate to that 4-bedroom job that we are doing? How many in my office? Am I going to give it to 2 people to work on? That 2 people that are going to work on, how much am I going to pay them? In the first place, how long will it take me to finish that drawing? If it will take me 2 weeks, it means it is half of a month. Those people that I'm allocating to it, how much do I pay them? I pay them 3,000 each a month. So if they are using half of the month, then it means that overall it is costing me 3,000 on that job. Do you get it? Now, what are the other direct costs that I have to consider? I'll print the drawings. I will maybe stamp the drawings. There should be cost to the stamp, because you pay for licensing fees. Okay, so those are direct costs. So you consider all those costs that goes into that particular project, and then you know that, oh, okay, so after estimating, I saw that if I take portion of it for electricity, take portion of it for the AC, like all those utilities costs and everything that goes into a direct, what portion of contribution did the indirect cost play? So when you're able to carve out a portion of that for the indirect cost, maybe the receptionist cost, maybe the accountant's cost, maybe 30% of that will go to that. You consider all those parts, they know that, oh, I'm going to spend about 10,000 cedis to deliver that project. So now you know that that is your floor price. you can't go below the 10,000, because if you go below the 10,000, you can't execute the work. So now when you price for about 15 or 20,000 and the client say, oh, I'll give you 18,000, you know, you were just looking at 30% profit or markup as profit, or maybe 30%, 35%. Now, from the look of things, you are getting about 60%. You laugh to the bank knowing that you have made some profit. Okay. So those are the things. Understand the cost. If you understand the cost, it makes it easy so that you don't price below your cost. Other than that, when you have challenges with your work, you won't be able to consult your seniors, like the seniors in the industry, to help you, because you didn't charge well. Okay, so understand that. I'm not going to give you a fixed formula template and say that this is let's say pick these prices. If it's 2-bedroom, charge it. If it's 3-bedroom, charge it. If it's 4-bedroom, charge that. No, it depends on the indirect cost, the volume of indirect costs, or your costs which are billed as operating costs that are available in your firm. If you don't have any firm and you can do it yourself, then that one, you have a lot of your indirect costs being taken out. So you are only dealing with the direct cost, and your salary is also considered as a direct cost. And so you only be dealing with the direct cost, and you don't have so much of of the indirect cost. These are examples of the things that we consider as hidden costs. Okay, yeah, the scope creep. So sometimes you make revision upon revision, extra revisions, additional meetings, expanded deliverables, not in the original scope. If you don't charge for it, it becomes a hidden one. Then we also have the unbillable time, the proposal writing, where you were chasing late payment, administrative work that can't be billed directly to the client. These are all hidden costs, which we consider as unbillable time. The downtime and the real work is where you have unclear brief leading to revision. The client tells you that, oh, give me any 4-bedroom. And then now you come and say, no, I want 3 of them to be master bedrooms, and then the rest can be ordinary ones. When you do that, I'll go back to revise it. Those ones are downtime. So it brings me back a bit. And all those ones, creeps or brings in inefficient workflows. We also have inflation or forex. That's if you're doing dollar rated projects. They can also come in as hidden costs. You price having the dollar in mind, and it was 16 and now it is 11. So then you see that you've lost some forex. These are all hidden costs. So these are the kind of margins that we have. We have gross profit margin. So if I finish delivering my work, and let's say I'm a freelance, okay, I'm an engineer, I've been called, like I'm practicing, I don't have an office, or let's say I have some 2 draftsmen, which I put them on part-time. The direct cost is how much I'm going to pay them, and then the printing and the stamping and all those stuff. So I look at that, I subtract that from the revenue that I've charged. The revenue is the amount of money you charge from the client. I subtract that from that, divide by the revenue, then I will know how much money I'm making. In fact, you are required to pay tax. See, but because you don't put the things in order, you always dodge the tax. Okay, so you're not contributing to the building of the nation. Okay, you're not contributing so much to that. Then the people because it is part-time or less on contract, they are expected to pay their own snitch and other stuff. So that's why a lot of people are now mixing their stuff. They are mixing it with full-time and part-time. Part-time, they are not reliable. You can't always get them. But full-time, you can always get them. Okay, so that gives you your gross profit margin. If you add administrative stuff to it and you deduct that one from it, it gives you your operating margin, or your operating cost. Okay, if you divide the operating cost by the revenue, that gives you your operating margin. Your operating margin will tell you how well you are doing, how efficient the organization is before you start applying taxes. And that is key. You need to know, as I said, the gross profit margin measures the project pricing efficiency and indicates if your fees adequately covers the direct cost. That's what the gross profit margin does. So you need to understand the cost, the gross profit margin. It will expose whether you are efficient in your charging or whether even your direct cost can be taken care of from what you have delivered. Your operating cost, your operating profit margin is where or your operating margin is where it shows that your practice performance after accounting for overhead expense. So I have deducted my direct cost, I've deducted my indirect cost. Then now I know that, oh, I still have enough money before tax and other things comes in. Okay, so these are some of the things that you have there. Then the net profit is the final. We call that the bottom line. So the net profit after paying your tax, what do you get? Whatever you get, you compare that against the revenue, and that gives you your net profit margin. So if your gross profit margin is not good, it tells you that you are not efficient at delivering the tax. Okay, and if your operating profit margin is also not very good, it tells you that probably you've hired more than is required. And maybe you have too many people there. So you are paying so much administrative costs. So then if your operating profit is not well, it's not good, your accountant will be advising you that the operating profit is not good. So look at that side too as well. So that is actually, some of the things. So for gross profit, if it is between 30 to 50%, it's cool for design firms. Okay. The net margins, let's say if after deducting everything, paying your tax, paying all your interest on your loan and everything, and you get 15%, 10% based on the volume of work that comes in the organization in a month or even a year, it is considered as also very good. Okay, so if you have low gross margin, it means check your price, check your scope, check your efficiency. You have issue there. If it is okay, if your gross margins are okay, then it means that you are going to have a very weak net margin. Those are some of the things that you should look at. Now, back to this. After knowing all your direct costs and your indirect costs, with this formula, you will know the amount that will let you break even as an organization. You have to work this at the top. I am actually playing between the two. I'm trying to take up at some point the cloth of somebody who is practicing solo, okay, on his own, or maybe freelance person, and then also somebody in an organization, because of the mixed audience I have. Okay, so pardon me when I'm switching between the two. You have to know as an organization your break-even hourly rate sometimes is very, very important, and then that will inform. So if I know that my break-even hourly rate is probably maybe 300 Ghana cedis per hour for the organization, it's easy to do that. You have to know all the costs that comes in, whether the direct cost, the indirect cost for the year. When you put that two together, you divide that by 12, it gives you for the month. That amount of money will tell you roughly how much you need to spend in the month, and that is your break even. So that is actually your floor, your floor rate that you have to get. Each month you don't get that amount of money, what is happening is that you are running at a loss. So you have to make sure that you get projects coming in more than your break-even cost. So you can build up your own rate for practice. Okay, good. So people came in. Some firms came up with the value equation, which is cost-based pricing. They say that for cost-based pricing, you sell your hours. Okay, and then for value-based pricing, you sell your results, what you give to them. And then in that case, you anchor fees on outcome. So you say, okay, so for example, we got some job and we sent our quotes and we told the person, okay, so we'll be able to deliver for you in a month. The person says, okay, what about you doing it in 2 weeks? Oh, okay. So now the person is not talking about this. The person is not talking about value base. I said, okay, if it is going to be 2 weeks, then it will cost you this extra amount. And the person agreed to that because the person's focus is on getting the job on time, on that early base. And so that becomes a value base. So if you hire, the reason why I will go for a very experienced civil engineer is because I want to reduce my risk. So if you are a very experienced civil engineer and you are pricing, you don't price like someone who is also just being called to practice. Okay, because you are adding value, so that affects how much you charge. I remember this joke where they said somebody went to an electrical engineer and told the electrical engineer, oh, I have a chamber a hall, 3 chamber a house, and I want you to do this for me. And the electrical engineer said, you want to wire a chamber a hall? And he said yes. And he said, and you came to me. So you want to wire a chamber a hall? And you came to me. It's trying to tell you that if I should give you my cost, it will be too much for you because of the experience. And it also feels that if he uses the time that he will use to do that job, it will cost more. Do you get it? And so I am of the view and even wish that the professional bodies will sit down, look at some of these things very well, and try to come up with some costs that will help those that comes in. Like somebody has been called to practice, and the person is 2 years in practice. The person, sometimes it's difficult for the person to call himself a senior director, or a senior consultant, or junior consultant, or even whatever position that he has to be. So some of these things, there should be clarity. And then if we can assign, but I say our jobs are not straightforward. They vary. They vary with scope. They vary with design. They vary with a lot of things. Okay, so there are some of the projects you will even need to get people from outside to help you. Okay, with some specialized considerations to be able to help you do some of these things. So some people have tried to come up with some price, and they say that calculate the true costs. That's include all your overheads. Okay, then add about 10 to 15% buffer. That would be for contingencies. And then also number two, they say that add some margin for profit. Okay, the profit margin is good. That is what sustains the organization. Okay, so that is very important. But once you are doing that, check market ranges. Like, don't say that you're only considering your cost, but also consider market ranges as well. Okay, know your percentage day rates. As I'm saying, like as I said earlier, the works and housing becomes a guide. So as you are building up your rates, you know that per your standard, the works and housing is about 480 per hour. But if we bill our rate about, maybe with our calculation, we are getting about 250. Oh, okay. Then if works and housing is about 480 and I'm getting 250, then let me up it to about 350. So so you can get some that can help you to compete on value and not necessarily on price. Confident pricing blueprint. Here you look at the value. So here this is where you negotiate on the scope and not on the fees. Okay, this is where people come to you for, based on who they know you are. They know you are very, very good with this particular specialization. So sometimes, because you are not so much in the industry, you can actually negotiate very well, not necessarily based on the fees, but based on the value, based on the reason the person is coming to you. Okay, there are people with very specialization, like maybe they are very good with earthquake design. Some are very good with several specializations, and that can always help you. So track your projects. Track your costs, track your margins, and that is very important. If you put your house in order, you will not have problem with the government, because you'll be paying all your taxes, because you will factor that. You will not have problems with the software manufacturers, where as a well-developed organization, you are still using crack. See, you're using crack softwares because you don't consider your software pricing as part of your cost, of which you should be doing. Okay, of which you should be doing. So two ways. Either, let's say you want to buy the Prota software, either you start saving from now. If you are using the crack, you maybe after 1 year, you should save enough money to come and buy that software perpetually. Okay, and that can really help you. So and then also reducing your costs after you found all these things. In reducing your costs, consider employing a lot of project management skills in there, so that you can ensure on-time delivery of your projects. Okay, projectize most of your activities in your office, so that you'll be able to finish a lot of your work on time. If BIM is giving you an advantage and there's a lot of quality assurance in it, or quality checks, please do that, so that you will reduce reworks and change orders. Okay, that can also help you reduce the cost, so that you can have more money in there. And our seniors, let's say the professionals who have practiced over a long period of time, engage some of them. Okay, some of them may not be so active in terms of the work, but you can engage them to review your works for you. Okay, there are a lot of them around. You can engage them to review your work, and that would lower your design risk and accelerate approvals. So if they check your drawings for you, and then they account for them as well. So put some markup there for their works. You can engage them first and see how much they'll charge you if you are to let them review your work. Because sometimes you may have architects, or let's say engineers designing very well, and then the draftsman would disgrace them with the drawings. So on site, or sometimes when the drawings are reviewed, you see all these things are exposed, and it's actually add bad name to them. There are some terms that protects your margins. Okay, there are some terms that can protect your margin. So you can say that, like, after understanding all these things and knowing how to charge or price very well, sometimes you can put certain things in place that can help you secure your money all the time. It's very important. So you can use one tactics like deposit plus milestone billing. At the beginning, I mentioned the fact that you can be profitable and not have money. You can be your company can be profitable, your firm can be profitable, and still you won't be able to pay salaries. Your company can be very profitable, and you wouldn't have enough cash. And someone may say it's not possible. Let me explain to you. If you get a job and the job is about 100,000, your accountant will record the 100,000 as revenue. So after all the deductions are made, he will record that you have made profits, maybe 50% profit. Now, if the person paid you 30% of the money, and he said, when you, let's say when you're done, I'll give you the 70. You did the work, did the work on time, give the work to the person, and then up to now, the 70% hasn't been paid. You see that on paper, you have profits. In real life, you don't have the money. So cash flow. So in business, you say cash flow is better than profit. Okay, so make sure you structure it such that it falls in line with when you need the money. So you can say that, give me 50% before I start. So that's the initial deposit. And then when we get to this milestone, I'll come for 25%. And then when we finish the last project, I'll come for the remaining 25%. You are doing that because you know that the 50% can help you solve your issues in the office for the first month. And then the 25% can also help pay some other stuff. And then the 25 will go into special fund of the organization. Okay, maybe you have developed a sinking fund that will support the company in terms, or maybe in situations where you don't have work coming in. Okay, so develop some of these things, and that will help protect your margins. And then when there are, and also in your contracts, put in variation and additional service clauses that prevents free scope creep that erodes your margin. Oh, change this for me. Oh, change this, changes. And then when they change one thing, it affects everybody. And sometimes as an architect, you see that you are working in conjunction with all the other professionals. And so when you change your architectural drawing and you are going back to the structural engineer, he'll tell you, no. It's beyond what we discussed. And who will bear that cost? So that will come in and creep and eat your margin, okay, your profit margin. So put in variation and additional service clause that can protect you. And then also have some late payment remedies. So you can withhold the final deliverables until settlement. Okay, that is also something. And why are you doing all this? Because you want to manage cash flow. It's very important. As I said, you can have a lot of profit on paper, but you are there and the government hasn't paid you, or let's say the client hasn't paid you, and you are there, and you don't have money. You don't have the money. So what do you do? Yeah. So as I said, profit is not the same as cash flow. You can have profit on paper. And that's why the banks, when you go for loan, the banks don't look at your profit and loss statement and see that, oh, you are making profit. No. They look at your cash flow. So there are things that they can check. Let's say you have very good cash flow system. So for example, they will check we call that your liquidity ratios. So they will have their quick ratio, the cash ratios, and all those stuff. They'll check whether you are solvent. They'll check quite a lot of things before they give you the loan. So don't blame them so much if you're not getting it because you don't have ample records. So there are some of the things that, you must have a dashboard that you'll be checking from time to time. If you have your overhead rate around 160%, or your let's say account receivables, you have to set it. If let's say people owe you and you can recover within 30 days, it's better. Every 30 days, there's money that is coming in. You can tailor that to your salary payment, and that can help you reduce the burden on that. Reduce the stress of that salary payment if you're running a firm. Okay, and your gross margin or your gross profit should be around 35% or more. That is better for you. Then, if at the end of the year you make 15% profit on all the projects you have done in a year, 15%, 20%, 25% for starters. I mean, for startup companies, you need more money to grow. But if you're a well-established firm and you're getting big projects and you get about 10% of the revenue that you got as final net profit margin, you are good to go. So those who were expecting maybe some formula that okay, so can you give me some formula that I can use and all those stuff? Unfortunately, I can't. The only thing is that I can guide you. I can explain to you what cost is. I can also explain to you, because every job vary, and you will be the one in the the one facing the client, and so I can only give you the guideline and guide you towards known standards, and then you can price along that one. Okay. So if you have, let's say, a labor cost that's around 120 per hour, and you've also been able to calculate. In fact, there are deep calculations that goes into it, but I can't capture all within this webinar. That's why I'm just sampling it up for you. But that will help you know your billing rates per hour. And there are a lot of things that goes, a lot of calculations that goes in. This one webinar like this will not be able to solve all. That is why I just want to use this one to help you understand your costs, help you understand margins, and then know when to price based on value and not necessarily on cost. Sometimes there are some jobs you should just walk away. Okay, you should just walk away and not do it. I learned this in the hard way. I tried to help some people to do some works, and I ended up regretting heavily. Yeah, because I couldn't charge well, and now I have to pay like other people to do that work for me, and it was actually a disaster. Okay, yeah. Two of them, and I have learned heavily from that. So key takeaways: your profit and loss must drive your pricing. Okay, so you must price above your break even with profit. That is what will help you. So know all your costs that goes into the production of the drawing or the job that you have gone for. Try to estimate all the costs that will go in there. If there are other supporting stuff that are going, we call that indirect cost. Consider that. If there are potential hidden costs, price for those ones too as well. Okay. If you use the profit and loss system, it's always better. But whichever figure you are getting, try to look at the industry rates and standard. That can help you, so that if even you are being truthful and your price is very low, you can at least shoot it up a bit. If it is too much, then you can look at where you can cut prices so that you can fall within. But the P&L is always the best way, because if you use that one, you will not undercharge. You will not for overpricing there based on your margin, based on your profit margin that you are looking at. It's possible it's going to go up, but for underpricing, it will not happen. So always you can use that one. Also protect your margins. Okay, protect your margins. It's very important. So check your gross profits. That will tell you if you are paying too much. Some people, they have a lot of draftsmen and there are fewer works for them. And by the time they finish, they estimate the direct cost, and it's too much. Please, when that happens and you know you are not getting a lot of jobs because of the season, please don't keep so much. I'm giving you this it's not a bad advice, okay, or probably because I want you to stay afloat. And this is something that you should know. I shouldn't even be the one telling you. You should know. Okay, if your cost cannot contain, you have to do what is right in there. Then also sell outcomes, not hours. Okay, if all the time you pay per hour, it's not actually the best. Pay charge per the outcomes. Okay, and then that is always, so that's the value-based ones, which is always good. Okay, and then stand firm on scope and terms. It's very important. Don't get a lot of generalized terms. You always struggle. Okay, so stand firm on the scope, so that if the scope should increase, you can charge extra. And those that you are working, the rest of the consultants you are working with will also be happy to help you push your project forward, or else they'll all back down. They'll all run away. Thank you so much. I hope I have been able to explain or to make you understand costs, margin, and then value. And I hope you'll be able to charge what you are truly worth. I want you to apply these principles in your next proposal and start building a more profitable and sustainable practice. It is always good to know what goes into your project or what goes into the production of of your works, so that you can do that. So follow up continue. Start developing something for yourself. Maybe a mini worksheet that can have all these things in place, so that can inform how much you charge. In fact, if you understand your cost as an organization, you always sit up month on month. You will know, so that if, let's say, in a particular month you have more works, you will know what to you will know that, okay, so you've made some savings for subsequent ones. Okay, so that is very important. Know your cost. If you don't know your cost, you can't charge well. Okay, know the people you are going to engage to help you. Most of the time, we may not be the people delivering the work. Those that are delivering, know how much you are going to pay them, and let it be as fair and as reasonable as possible. At the beginning, when we all started, we were all scringing and saying that, hey, I'm not paid well. Now you are the one taking the job. So when you're engaging the other people to pay them well, so they will also come up with something reasonable for themselves. So review your current proposal templates, your cost and everything. Review it from now, so that you will charge not based on guesswork, how you feel, the funeral you have. So because of that, you have to charge hard. Maybe something that you want, your need. No, charge based on what you are truly worth. Charge based on what your office is truly worth. Charge so that you don't run at a loss. Because the next time I want to see your business alive, and I want you to see I want to see you doing very well in your practice. Maybe at another time, because these calculations are, I don't want this webinar to be too much of a calculation. That's why I freed you with, from all those stuff. But we'll find another time, and maybe we'll consider those calculations, so that you will know how to charge what you are truly worth. Thank you so much for your time, and we'll see you same time next week. Have a great week, and I hope your practice is going to change. God bless you.
Thank you.